An exclusive interview is the Secretary of the Interior, Doug Burgum. Secretary Burgum, it's great to have you on Overtime. Welcome.
Great, Morgan. Great to be with you.
Okay, we're talking about commingling, which would allow oil and gas that's produced from different reservoirs to be using the same well pad. Why is this meaningful? How does it boost production?
Well, Morgan, commingling from different sources was something we've already put in place for offshore. Today's announcement deals with onshore, but it's not just different reservoirs. It's about the fact that the federal government has had such outdated rules that right now, unless it was the same ownership, the same royalties, the same everything on a pad of land, on Bureau of Land Management land, you couldn't commingle. So this is about making sure that state, tribal, private, and federal resources all can be, with today's technology, easily measured at a single wellhead, which means greater efficiency, less capital expense for the industry, smaller and fewer number of well pads, which is great for the environment. And we expect that the announcement today could save the industry in close to $2 billion of capital expense just by bringing everybody up to bringing the federal rules up to what many states are already have in place today.
Is that going to change the oil field services game? I guess how does it change the business model for the guys that are putting the rigs up and servicing them?
Well, it won't change anything about putting the rigs up and the servicing of them, but it's going to really help on the back end from an accounting standpoint. It will help with some redundancy of equipment because at a single wellhead, you'll be able to, we can accurately measure if you've got different ownership across, say, a 2 square mile, 3 square mile pooling unit where we're splitting the royalties across different ownership at different royalty rates. That can all be done with today's equipment. So again, this is just the federal government being behind, playing catch up, a simple rule change. This was one of the things that we had proposed. It was included in the one big beautiful bill. So this is now law that we're able to do this on Bureau of Land Management. Again, great for the operators, great for the environment, and great for taxpayers because we'll be able to collect more revenue for the citizens of this country off the federal lease permits.
I mean, it speaks to this wave of regulatory reform and permit streamlining that your agency and others, including the Energy Department, have been involved in. We've seen crude prices come off. They're off from a month ago. They're off from the start of the year. They're off from a year ago. How much does all of this regulatory reform actually spur investment by producers into domestic oil and gas if you do see those prices continue to come off?
Well, I think one of the things that we know is that one of the huge costs of developing energy on federal lands in particular was all the regulation, whether it was the Environmental Species Act, whether it was NEPA, which is being reformed, getting all the permitting done on federal land. It discouraged capital investment. We know that even some of the studies that have been done in the Permian by companies like Morgan Stanley have showed that if you've got a private lease, you might be getting 4 times as much, $32,000 per acre, versus on federal $8,000. That's how much the cost of regulation is priced in to this. The Biden administration's strangulation by regulation was very effective at one thing: driving capital away from developing on federal resources. And this, by us cutting this regulation, we can actually lower the break-even point for people in the oil and gas industry developing, because at a lower price per barrel, they can still make money, because I think we can cut at least 10% of the price of a barrel right now on federal land is regulatory overhead cost.
Hi, Mr. Secretary. Going back to the commingling change proposed, if this goes through, how do you prevent premature depletion and pressure interference? Are you proposing any new requirements for higher resolution reservoir models or dynamic pressure monitoring so it's clear where the resources are coming from?
Well, I think that technology all exists in places like my home state of North Dakota and the Bakken. Commingling has been going on for more than a decade across different ownership pools, and that's what we're talking about here on the onshore, is just allowing people to be able to commingle across different mineral ownership. And of course, the 4 basic cases of that is federal, tribal, state, and private interest. But on BLM land, unless everything was identical, including the royalty rate, we were not allowing operators to commingle, even something that was just an accounting, nothing to do with reservoir pressure, just accounting on the back at different reservoir rate. They had to have duplicate equipment in place. So this is just a common sense step forward that's going to lower the cost. Like I said, could free up as much as $2 billion in capital from the industry that they don't have to spend, creating redundancies that aren't necessary, because the technology can allow us to accurately separate which oil is coming to which owners.